Alrighty. All right. So, pretty big morning so far. Kind of expected us to gap up pretty good here. And we've been kind of on the rise all morning in the equity front anyway. A little bit of a sell-off right out of the gate from about 6 last night to about 6:30. And then pretty much reversed. And we've been up and away. I mean, it's not like a face-ripping rally, but, nonetheless, ES is up 27 handles. We have the NASDAQ up about $1.20, Dow up 235. We got gold up $3. Bitcoin having a huge day. Kind of expected that as well. Bonds kind of off almost a full point at 119, down from 120. We got the dollar basically flat, and the VIX with a slight bid. And that is about the size of that. As far as crude has been all over the place overnight. It ripped early, and then kind of backed off. And it's kind of been chopping and slopping most of the day. And then soybeans, I mean, you just can't catch a bid in soybeans. I'm going to look at that. We're going to look at that because we have some of these grain markets at some extremes. Now, the one thing about those markets, it's very, very difficult to kind of catch that point when they turn around, because when they want to sell those off, they sell them off, and like you can't even put enough orders out there to find a bid, and that seems to be what's going on right now with the grain market as a whole, which is kind of interesting. So that is about the size of that, and then I'm going to get started in a second. Okay. All right, and let's jump into the hourly charts right out of the gate, and let's take a look at the ES. And tough market to trade, in my opinion. I'm going to be looking at all these pivots today, mainly R2 is a 57.18. So I'm going to go ahead and create an alert for this. And then, just on the side here, I actually did decide to take one of these combines. So I'm actually in one of these evaluation trading combines. I haven't taken one. It's probably been, I think, back in 2015. So literally almost 10 years ago, I had done it when a lot of these places were relatively new. And I don't know. So I'm going to be trading in one of those. I want to see if I got what it takes. I mean, the thing everyone has to realize, too, is that, look, these places are not your friend. They're definitely not your friend, but I don't think all of them are your enemy either. I do think there's, for one, I mean, I'll go out on a limb. I had originally done my combines with Top Step, and it was kind of a pretty bad experience a few times. And they were. I mean, I have to say that back in the day, long ago, they were just like everybody else, right? They were just looking for that income. But now it seems like there's so much competition. So I think they've all stepped up their game now. So they're literally like not charging much of anything. Like some of them, I think Apex charges like $30. Top Step charges like $49 now. They're offering a bunch of stuff, and the reality is that there's so much competition now, and it's actually a good thing. It's about time. I think the time I was with Top Step, there was really nobody else, and they could treat you however they wanted. But I mean, I have to say, so far, been doing it for about a week now, and I'm pretty satisfied with not only like the support, but as well with just the engagement from them as a company as a whole. There's tons of podcasts now that they have. There's actually coaching. I'm not really involved in that. I don't really want to. I'm an old fart, so I don't really want to. You can't coach me at my point, right? I'm one of these uncoachable people. I'm too old. Look, I'm more than willing to learn something new every day, but the last thing I want to do is kind of listen to somebody go, you gotta have this. And I've been doing this a long, long time. Yeah, I know I gotta have discipline. I know I break my own. I know there's a lot of things that we all do. But I've been doing it so long now. It's like, you know what? And what I've been doing works. May not be what works for them, but I don't want to get involved. Anyway, so I'm going to be looking at R2, so just letting everyone know. So if you see me do a trade or something like that, it's most likely I'm going to be doing it in one of these combines for these futures. And they only do futures. You can't do options, and it's kind of a shame. Probably it would be really cool if you could. I would love to do it for options because I'd probably kick ass. But I don't know if I'd even bother. I do that in my own account, so I don't need their money. This is just like, I'm just doing this for myself, just to see if what I've been doing over all these years still works. I was funded a number of times from Top Step, and the rules they had at the time, quite honestly, were completely ridiculous in order to pass and stay funded. I mean, you literally had to trade 10 days out of the month, or else they pulled your account from you. Like, I don't know if they do that anymore, but I was like, that's bullshit, because I don't even trade futures 10 days every month sometimes. Sometimes I only trade like 4 or 5. Sometimes I trade 2. Because sometimes there's just no trade. If there's no trades, I don't trade, right? I mean, if you're trying to teach people discipline, and then you're going to pour. But anyway, they don't do that. I don't think they do it anymore. But anyway, so we're going to be looking at this R2. So I just want to let everybody know that if I do a trade, it's going to be in a combine. It's not going to be my own account. So I think it's important to tell people that, because I've been watching a lot of videos lately of these people, and they're like, oh, look at me, I'm live trading. No, you're not live trading. You're trading a combine too, and you're getting paid by whoever the combine company is to push their shit. So stop. Just be honest with people and tell them you're in a combine, or you're in some kind of express funded account that's still sim. Just be honest with people. That's all I ask. So I want to be honest with everybody. So anyway, I'm looking at R2 in the ES. 57.17. Yeah, we haven't been up there. So that would be all-time highs. And I'm not really one to just short the all-time highs. But I do see, we do have a pretty classic double top in here. I mean, you can't get any more classic than that. Right? Here you go. I don't make this up. You can't get any more classic than this. And this is on the 1 hour. So I believe this to be valid. If it was on a 5 minute, I probably wouldn't put too much faith in it as for it to even come to fruition. But since it is on the 1 hour, I mean, I have to take it as here. This is a pretty classic double top. But what I see happening, and if we do manage to get another, momentum push, I see us blowing out here. Taking out those shorts up here and this whole area, right? Taking out those people who want to short the highs. I mean, the market loves to do that, right? Run stops, and then run stops from about 57.07 to about 57.16 or 17 or so. 19, whatever it is, somewhere up there, right? And I think that's a more strategic spot than just these highs. So as far as like what I'm doing on the other side, I'm just going to stick to the standard pivots. I'm not even going to really go over them. You can see them if you have the study. It's the pivot study. I've been over it a million times. It's the pivot study. Here's the studies. Again, no secrets here. I don't pay for any of this stuff. I should say I'm in the pro on TradingView. I'm in the pro, whatever that is. I prepaid like 2 years or something like that. And then they're always trying to upsell you some bullshit, right? Because that's what TradingView does. But I guess they got to make their money somehow. But as far as on the downside, what I think is really interesting, these pivots are all at and around a couple, especially S1 down here. You got this huge band of profile here sticking out, right? So I'm going to be looking at that spot. And more importantly, there's a point of control here, which is almost right at S1 today. There's a point of control. These are previous points of control right under that. And then another one just before S2. So if I was going to point to an area on the downside that looks relatively interesting, it's relatively big. It's going to be this whole spot all the way down to these lows here. And let's do this. I don't like the way that looks. Let's flip it. I like that. And why I'm going all the way down to 55.87 is because of that. And that's just above the point of control. And then we're going to change this to green. All right. And so why am I marking that whole entire spot? Because you're going to have to watch price action all in here. As I always say, if you come down to these levels with any kind of momentum and force, stay out of the way. Don't stand in front of the truck. If we kind of grind down there and it looks like things are starting to exhaust near any of these areas in this spot, I'm going to take a long if we're coming down that way, right? And it's such a large area, and you can see this is those lows from back last week. Well, actually a week and a half, the beginning of the month. Wow, it's the 15th. And so, I'm going to be looking down in that whole area, right? Here's the point of control on the big. Here's a point of control from the other week. Here's another one. Here's another one. Here's another one. Here's another one, right? And then we don't get another one until all the way down here, right? So that's a whole nother ball game. And if we're down, at 55.69, that's a pretty big move. I'm probably going to be standing on the sidelines if we're getting whipped up that bad. So that's kind of it. That's my game plan today for the ES. Just really those two little spots. I'm going to put an alert in right around 56.44. Kind of a ways away, but given that we've been ranging, I'm expecting a range-bound day today in these markets. I'm not expecting anything unless, something comes around or something circulates out news-wise. I'm not expecting much. There's a bunch of earnings that are going to start coming out now. It is earnings season, so we're going to get that news now flowing in after the bell and before the bell. I think there was some companies, not anything notable, I don't think, this morning. At least I haven't seen much. I see Goldman Sachs, right? Goldman Sachs, but who cares? Like Goldman Sachs, up 1% after the results. Like Goldman Sachs always makes money. Like, stop. Like, why is that so surprising? It's like I laugh. It's like Goldman Sachs. Oh, BlackRock. It's like, yeah, okay. Like, of course, they basically run everything. So, anyway, there you have it. That's the game plan in the ES, and that's all I have to say about that. And that is all I have to say about that. So, next, and certainly not least, I am going to talk about crude oil, light sweet. I have to say I have not done a hell of a lot in crude oil of late. In fact, I think the last trade I did in crude oil was back in June. Yeah, it just really has not, yeah, it was right. It was around here because I know I caught a short and I caught a pretty nice one. Pretty rare occasion I actually made money on a crude oil trade. Um, but but yeah, I mean, to me, it just really has not been. I mean, unless you were long and you've been trading long, you really didn't fare well at all. But I think that's kind of changing, and we failed. I drew this line back about a week ago, and we've failed to kind of break out of this, and then we're breaking down again. And I don't know. To me, crude oil is looking a bit. Again, if all else stays the same. To me, it looks a little bearish, right? So, I mean, I have to trade this with a little bit bearish sentiment here where I might be selling some of the rips. And I'm going to be a seller as long as we continue to stay under my magic blue line that I drew on here that I'm sure, every other technical analysis guru running a trade room out of their parents' basement probably has on their chart. And, it is what it is. And so I'm going to continue to. So what I'm going to do today is I'm going to go ahead and I actually like kind of two counter trades to this trend. I kind of like this S3 down here, 8106, for a quick long trade. We have the lows back from last week, and we also have a S3. Now, it's a decently big area, but I like it. Again, just for a quick scalp trade. I'm going to mark two spots. I'm going to mark the S3 and I'm going to mark those lows. And the reason is that, crude oil does have that tendency to slip through a lot of these areas, right? Stop runs, whatever you want to call it. And I'm actually going to hit this like literally right below 80.82 is the other spot. Again, this isn't an exact science. I don't get it down to that much. What I want to accomplish here it looks like it's the 10th, the low of the day on the 10th. What I want to accomplish here is I want to get alerted that we broke so I know when to start looking at price action, right? Because I'm going to look down here, I'm going to grab my order flow, and then I'm going to say, all right, are there buyers hitting the tape when we've gotten down there or sellers in control, right? And that's kind of what I'm going to do. So there's kind of one counter trend trade. And then I also love, I think the setup of the day in crude is up here. From about 83.98 down to 80, I'm going to call it about 83.70. All right. And the reason I like that is I like it. But, it is a swing high. We have a point of control here from a couple of weeks back. We have these highs. We still have it. It still wouldn't breach this upward trend line, this upside trend line that I had, which is trending down. We would go through a resistance, and we have this point of control up here at the top of this. And again, that's kind of what I'd be looking for, a short. And I think this is the trade. I think this could be the trade of the day if it pans out. All right. So that is the story with crude oil. All right, and that's kind of all I really have to say about that. I am not going to dick around with anything inside of here. I think this is chop, and I think you could cut to pieces if you play around inside here today and try and pick. This isn't really a bad spot down here at S2. Problem is right. We already tagged it twice. The probability of a 3-time tag if we stay range bound. Look, if we stay range bound, it might be a cheap trade to kind of take at that point. I don't like it because to me it just seems like if we get back down there, we're going to run down into the 81 range. Again, that's just what I see on the chart. Could you take a cheap trade there though? Probably, for sure. I think you could definitely take a cheap trade here, and I might just mark this because it depends on how I feel, right? 81.66, and I'm going to mark it as such. And the thing about that is you could use like one contract with this one. This is one of those where you use one contract, use a tight stop. I would say you don't go any more than. I would say not any more than 10 to 12 ticks. Like risk $100 tops. Again, that's just my opinion on how I wouldn't give it any more than that, because if it does run a 10 tick stop down there, it's going down to $81. Again, just my opinion and how I see it. Someone else might see it another way. That is kind of my gig with that. And I'm going to write in here in the disclosure, this is a cheap trade. What I mean by cheap trade is like to risk $100, you're in a pretty high probability bounce spot, but you got to be quick on the trigger too here. If you bounce and you get 100 points, let's say you get 10, 15, even 20 points and you retrace back to 82.02 or even near there, you got to be willing to get the hell out, because it literally could be just that, right? They run stops, they bounce, right? They cover, and then it quickly reverses and then just plows through. I think we all have seen that before. So to me, that's a cheap trade, and you can get. I think you got a pretty good risk reward there. Risk 100, probably make 150, 200. I think. Anyway, so that's it. That's all I got in crude oil. I don't want to get in the weeds of anything outside of that. That's kind of what the story is for today, and that's how I'm trading it. Let's get into and let's look at gold. I hate, I guess, always have to disclose, I hate gold. I can't stand it. I think it trades like shit. I know there's a lot of people who make a lot of money with it, and I'm not, hats off to you. I commend you for doing it and trading gold. I can't stand it. And the reason I don't like it, it's thin. It's generally a thin market. It tends to drift, and you, for the most part, you kind of need some pretty wide stops at times to really trade this thing. But we have, you have an interesting setup here. I believe these are like all-time highs, right? Yeah. You have a double top. We're on the verge of now. We're on the verge of now tagging that again. And you have, you have a likelihood of a triple top on the hourly. And the odds of that happening are not extremely, extremely big. I don't know what they are. I mean, I probably should go research it, but you do have the likelihood of a triple top in here. You know, and I don't know what that means, but I just don't see too many triple tops, like especially on like an hourly chart. It usually doesn't set up that much. Usually you'll get that triple top or somewhere near it, and then you'll get some pullback to where things will level off. But again, I look at gold here and I just see face ripping blow off top. That's what I see when I see gold here. We've consolidated pretty much in this area here. And we seem to be just, right? And we have the point of control down here, which are going to go down to here. I don't like that. I like that instead. But we've actually consolidated in here for quite a while in this range. And this normally doesn't get right back here. The thing is this doesn't normally happen forever, right? It doesn't go on. In most commodities, right? It doesn't go on forever. But the thing about gold is that this can literally stay like this, and we've seen it, and we have the data to prove it. If you even go back and look at a long-term chart, gold has done this forever. And this is one of the reasons why I can't stand trading gold. Because it will get into a range and it will stay there for months, if not years, like literally years. We could not break 2,000. I feel like they were talking about gold breaking 2,000 like 15 years ago. And it never did. And now now that it seems that it broke 2,000, it seems like it's just on a tear now. It just keeps taking out the highs. I don't know. Does that continue? I'm not sure. I don't know. I don't know. I mean, it looks relatively bullish. And if you're actually, I don't know. I mean, again, I'm not a pattern junkie. I mean, I'm a pretty basic. I call myself a pretty basic pattern. I look for double tops, triple tops. Ascending triangle type stuff. Those are the things that I look for. What else do I look for? Wedge. I don't know about rising, but usually when something's wedged up, I always try to look for those. Or and the one that I actually kind of catch once in a while, and I'm wrong because again, I'm not a pattern person, but I always like to have them out there because you got to remember, you're not the only one looking at these charts. And I was trying to explain this to my son, not just recently, but a while ago, that you have to realize that when you're looking at your chart and you're painting it up and you're doing all this stuff, that you're not the only one out there doing this. There's literally millions of other people out there, some with influence, some not, but there's literally everybody on the planet is looking at the same chart, same hourly chart. You know, it might not be what I have on my chart, but it's basically the same price action with the highs and the lows and the blah, 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 blah. And that if there are, a percentage of people who are looking at that pattern, it's going to have an influence on that price. Long term, it may be meaningless, but short term, it may have an impact. So you kind of have to be aware of it. Anyway, that's kind of the way I see it. And so I guess what I'm getting at is, this is kind of flagging? Is it? I mean, I don't know. I mean, I have to go and look. I'm usually pretty bad at finding a bull flag. But I think I've managed to get better over time. I think that's kind of a bull flag. I think. Or it's developing into one. And I guess the reason I'm even making a big deal about it is because if it is, it's a pattern that I know a lot of people trade. I think you ever do this. Yeah. Right? I don't know. I don't know. And I guess if that's the case, this area down here, let's just try to zoom in here now. When I'm looking at gold, I'm kind of looking at this S1 area as kind of a ripe spot. Right in here. Right? We kind of have a double candle right on the hourly, and then we quickly reverse. We're rallying now, but if we get back down, I mean, that's a pretty big move back down to 2407 to about 2402. I kind of like that spot. And does this break out? I mean, if this gets up over, these are the highs. I mean, I don't know if I take the short at 2431. Even though it's an R2, I just don't. I actually see us blowing through there like it's nobody's business. So anyway, as far as trades in gold, I don't know if I take shorts if we get up near new highs. I just don't. I'd rather step out of the way. I'd rather buy a pullback in one of these spots down here and then catch it back up than try and mess around with these highs. So anyway, that's gold. That's really all I got. It may have been confusing, but it wasn't to me. I mean, that's kind of how I'm rationalizing in my head, and then look back, right? So I would rather have this pull back and buy down in here, right? And buy down in here than mess around with trying to catch this thing and then try and find the counter trade here, because counter trade has been just face ripping a lot of times in gold. So that is kind of it in gold. So I don't really have anything. I'm probably going to set an alert down here at 2407. That's a pretty big move, though. That's a pretty big move. I don't know if we get there today. And that's it. So that's gold. Now, depending on... Oh, geez, what the hell did I do there? All right. Yeah, that's it. That's all I got in gold. That's all I got on that. And then last but not least, this is kind of getting to a point where and this is soybeans, and I'm actually going to go on a 4-hour, and then I'm going to go on a 5-year, because you just can't seem to. And the reason why I'm even bringing this up is that I always try and look for extremes, right? We have all these markets running to highs and making new highs, and we kind of have another market now doing the exact opposite in soybeans, where it just keeps making new lows, new lows, new lows. And it doesn't seem like there's any sign of a bottom anywhere to be seen. And to me, that's presenting an enormous amount of opportunity for this thing to turn around. And it's not just been, I mean, here's the year to date. It's just been ugly. And here's the 5-year. And you see we're starting to get into areas here. We're about 100. It's actually $1 in price. These are dollar prices. But we're about $1 away from really getting to levels where we haven't seen in over 5 years, and 5-year lows, and where I think you got to start looking down here at something for some potential bounce. But if you look at this chart, this looks absolutely awful. I mean, and do you just short this down to 936 and just hang on to it and be done with it? Because it does look like we're getting back down there. And it's been a pretty methodical sell-off literally all year. You go back, to 20. Here's 2023 right here, right? Down the entire year. Here's 2024, down the entire year. And then this is kind of the peak up here of inflation, right? It's $17. And we're down now to $10.47 for a bushel of soybeans. So kind of crazy. So, I mean, anyway, I'm just keeping it on the radar. I don't have anything on the table today to do, but I'm definitely keeping it on the radar. Down here, 935, 913, an ultimate buy spot is like 882. And I don't know, we get back there. That's pretty devastating, though. I mean, if you really think about it, it in terms of, market baskets and all that other stuff when it comes to the farmers and everything else. And it's actually, I haven't seen prices like this in over 5 years. And it doesn't seem to be translating into any benefits or any cheaper stuff at the grocery store, right? Hell no. Not at all. Anybody who's been grocery shopping, prices are the same. You can find sales on a lot of the shit food that everybody buys, all the frozen pre-made crap. It's always on sale. There's always coupons and it's always cheap. And, and people, you go to Aldi's and you buy blah, blah, blah. Yeah, but it's still processed frozen garbage. It's not fucking food. That's fucking poison. And look, I eat it too, but I don't eat it every day and I don't go stock up on it. It's stuff that's in there in a pinch maybe once a week, maybe twice a month. You eat that fucking garbage. You don't fucking live on it because you fucking wind up getting fat. You wind up getting fat, lazy, and you wind up, killing yourself. So anyway, needless to say, these low prices in commodities in agriculture are not translating to cheaper prices in the supermarket. And so anyway, just keeping soybeans on the radar. And that's it. I think that's all I got. I'm not going to look at Bitcoin because I really don't trade it per se. I mean, hodl, baby. Hodl is all it is. And that is about the size of it. That's all I got for today. And what we see, we went for 37 minutes. And so there you have it. So there's my take on what's going to happen and what I'm going to do today. That's the game plan. So have a good one and hope to see everybody back tomorrow.